Hi, this is Tim Biggam, and this is Vol 411 on a day where we're seeing the VIX still below that all-important 16 level. That was that lower bound of the regime of volatility, so the recent rally has certainly made the markets more comfortable here, being reflected in the VIX below 16, near the lowest levels we've seen since the COVID crisis began. Shorter term vol, that 15-day straddle, even getting cheaper here, so we're looking at that 15-day straddle on the S&Ps trading well under a 12 IV at 11.5, price at about 850. Compare that to last week when it was well over a 12 IV and that same straddle was trading at 9. Even with the S&Ps up, about 2% over the past week, that straddle has actually gotten cheaper here, just to show you just how far vol has fallen, especially on the short end. We're seeing that term structure volatility cheapen as the shorter end continues to be sold down here compared to the longer end, so that contango getting even deeper here. Seeing put volume pick up today. So far, puts outpacing calls 2-to-1. Notable activity, the November traditional 17 puts over 10,000 trade. We're seeing the SKEW hang around that low 140 level, and we're seeing the VVIX approach the lowest levels we've seen since last April, nearing the 100 level. So interesting, all this happening with the biggest week of earnings coming up next week. As far as market cap, we're seeing Apple, Microsoft, and Alphabet, the big three, reporting next week. So with vol this cheap and earnings very important coming out next week, we'll see how it rectifies itself. So until next time, this is Tim Biggam, and this has been Vol 411.